All right, man, so here's what I want to do, man. I want to show you if you just starting to invest, man. Again, I know I got a lot of new trappers in, man. They always ask me, Trap, how do I get in the game? How do I get started, bruh? So once you go through some of the things we talked about, one of the things I'm going to say is let's take 100% of $1,000, right? Let's say we take and put 50% of that inside of some ETFs. We talked about that earlier, what ETFs are. Let's put 50% of that inside of ETFs. Let's take and put another 15% of that inside of some growth dividend stocks. So these are solid companies, Visa, Apple, Home Depot, Starbucks, some solid companies that pay dividends because the dividends then become the catalyst. We got the ETFs as our foundation. This is our foundation. This is making sure the house strong, right? We balanced our risk with the ETFs. Now, we done came now and set up our pillars in the inside with strong, solid, individual companies that pay dividends. Then we got our growth stocks, right? Remember the 15%, Amazon, Teslas, Googles. These are our growth. This is what our growth is at. 15%. And then we put 10% inside of real estate. We can switch this out.